Jacques Lacroix and I started this fund going on 10 years ago now. We have been asked hundreds of times, why invest in your fund over other people's? It's very difficult and it's very confusing to choose a fund to invest in. We've come to the conclusion it's actually not that difficult to pick a stellar fund. Globe Mail ranked us 5-star. We'd like to be 5-star 5 years from now, and certainly Jacques and I are working towards that. But let's just review, what it takes to identify a good investment fund to go with, and really it's not that difficult. I mean, there are thousands of funds in Canada. There are thousands of mutual funds. There are at least 200-300 hedge funds. There are ETFs. There are real estate funds of all kinds. So let's just narrow it down. If you ask yourself 7 questions and you don't get the right response to those 7 questions, you should not be investing in any fund. So 7, that's not so difficult. We can nail this in a couple of minutes. Number 1, are you investing alongside the management? If management is not a big investor in the fund that they are marketing to you, well, what are they doing with their money? I can tell you, we have all our investable capital in our fund. We are long more than, I think it's more. We are more materially long than anybody else to our life, and that's the way to do it. When every decision Jacques takes to change the portfolio is the exact same decision it takes to change your portion of the portfolio. So if you ask the person how much does the manager have invested, and the answer is no, do not invest. It's pretty simple. Let's go on to number 2. How large is the fund? It's amazing how people don't ask that question. A lot of people say, well, small funds are not worth investing in because they'll, I don't know, you got to invest in larger and larger. Bigger is better. I can tell you in Canada, if the fund is over $500 million, if you're running a hedge fund over $500 million, there is no way that you can keep up with the returns of guys managing less. So there's a certain point where it's too large, I think our funds now we're at $40 million. We're, I think, far too small. It'd be better to be bigger. But we started the fund with, I don't know, $2.5 million. That was back 9 years ago. I think the ideal number is, frankly, $200 million. I know there are a lot of fund management groups out there that are managing, $20, $30 billion. I can tell you their returns go down precipitously after a certain size. If the fund is too large, please, just move on and find somebody who's keen to grow their fund to, let's call it $500 million. In the hedge fund world, in Canada, 200 million is the right number. I know people don't want to talk about that. They want to talk about 2 billion being the right number, but that's because they're larger institutions, and that's the way they roll. Here's a simple question. Does the money manager believe, ask them, do they believe that the markets, the equity markets in particular, are efficient or not? If the answer is yes, they believe the markets are efficient, why are you even discussing investing alongside a manager like that? Because if you believe they're efficient, why don't you just go buy an ETF? Because you can buy the market. It's not expensive to buy the market. Fundamentally, if you think the markets are not efficient, then you will be able over time to capitalize on the inefficiencies. That's the way we run our hedge fund. We've been doing it for years. We've been compounding at 13.5%. The market's down at 5.5%. We consistently outperform the market because we're exploiting inefficiencies. So ask them. If the answer is, yeah, markets are efficient, just move on. I guess question number 4 for me would be, do the managers have a global perspective? There are, I'd say, most of the money managers in Canada have worked their entire lives in Canada and have more a North American focus. I can tell you that the investment business has become a global business. It is an international business. If you do not bring a global perspective and global experience, global education to the party, then you are not going to do very well in this business. So ask them. What have they done outside of Canada? What have they done outside of North America, frankly? If they don't have a lot of international experience, I'd hesitate and find other people that do, and there are lots here in Canada. What is risk? A lot of people associate risk with volatility. The more volatile it is, therefore the more risky it is. There's actually a very simple question you can ask, particularly with regards to hedge funds, is how much leverage do they use? How much leverage is in the companies they're investing in? How much leverage is in the fund that you're going to put your money into? What is the feeling about leverage? Because it's leverage that kills. Leverage kills returns, okay? So you don't need leverage in this modern world of ours to make good returns. We designed our fund to have no leverage, period. So to just make it simple, we put it in our documentation. We could use a little bit, 20%, 30% leverage. We've never gone that high, but we're restricted from using leverage. Therefore, it should give investors some comfort to sleep at night. Many hedge funds don't disclose these kind of things. They say, well, we only use 100% leverage, or only use 200% leverage, or they use the futures market to an extreme and don't really tell you ever how much leverage they use. This is where people get themselves into trouble. And I would just, if you're not comfortable, if they don't give you comfort in answering that question quickly and truthfully about their views on leverage, then move on, because you don't need this kind of volatility through financial leverage. And there are plenty of guys like us that don't need it, don't require it. Ask portfolio managers what their view is on specific sectors. What are their favorite sectors to invest in? Where do they see opportunities? I mean, most mutual funds and of course ETFs and whatever, they're designed to replicate the markets. Well, frankly, we think that's kind of a waste of time. The market is the market. Just go buy an ETF. You own the market. Why don't you invest with managers that can identify these huge opportunities that come in certain subsectors of the market? Jacques and I worked in the back in the 90s in the wireless mobile business. I mean, this was just a mega trend that went global. Started in North America. Of course, Europe caught on quickly, but basically became a global trend and transformed the way the world worked. An enormous industry built up in mobile telephony. So you didn't have to get it in from day one, but you needed to recognize the opportunity. In fact, that opportunity has been going on to this very day. My entire career has been watching, the development of wireless telephony, and there are mega trends happening, and you can make a terrific amount of money just by getting the sector right. Well, you better invest with managers that get excited about certain sectors, and they may be wrong, they may be off on timing, but the fact that people are looking for those big sector opportunities gives you a good chance to make extraordinary returns. Healthcare sector in Canada, just to give you an idea, 12 months ago, nobody was talking healthcare stocks. We invested in a few. All of these stocks dramatically outperformed. It's just, do you want to own utility stocks in Canada when the Canadian dollar is going down 20%? I don't think so. So we make good returns by choosing the sector. If you're with managers that really can't get excited about certain parts of the economy, and especially the global economy, then why are you investing with them? They're just going to be market, index replicators. Finally, seventh question: track record. This is one of the rare opportunities that you get to sit down with a manager and look at their track record and see the historical performance and ask the questions. If the manager has been in business 5 years and has not outperformed the market and cannot show it with audited statements, then what do you think the next 5 years is going to be like? I mean, to me, it's a great opportunity to evaluate the performance of professionals, and you can do it in professional sports. You can see all the stats, and you can do it in the investment business. So take advantage. It astounds me. I mean, Globe Fund ranks as 5 stars, and so they have the data. It's right there on the website, Globe and Mail website. Just go on and you can see who performs. Why would you ever invest in funds that have outperformed over a long period of time? I mean, you have this great opportunity. So if they're not showing you on our website, you can go and see our performance. If people don't have it front and center in their marketing documentation, why are you even talking to them? It's all about performance. This is why you're trusting your money to folks like us. You expect a return. And anyways, we've been doing it for 9 years. We'll be doing it for another 9, and you can measure us monthly. And by the way, we'll send you the information. So anybody who's not doing that and making it very, very clear, and unfortunately most don't do that, then just move on. So there you go. 7 questions to ask, none of them very difficult. Get the right answer in all 7, and you've narrowed that thousands of funds. You've probably narrowed it down to a mere, I don't know, 20 or 30 funds to look at. And by the way, if they answer all 7 of those questions properly, whatever fund you invest with, you're going to do fine. If you're interested in what we're doing, please feel free to call. I mean, contact us. We're available. We have a website, a terrific new website. We respond to all inquiries. We like to hear from our investors, and we encourage people to contact us. We tell people what we're doing, and chase us down and feel free to approach us. We're around.